Good morning and welcome to Trading with Larry. It's Larry Benedict joined by Clint Brewer. Clint, thanks for stepping in today. Always able to do it. I appreciate it. I thought I was going alone. I don't know what happened to Eric, but he's not on today. But a lot to talk about. Talk a little bit about trading action from yesterday, which was pretty wild. But I want to get a little bit to news on the tape. The first thing I was looking at. Let me back up a minute. Overnight market was lower, then traded higher. Was at 8 o'clock up on the highs of the day. And then there was something out of the FT that Blue Origin says that the deal with Oracle, which is only a $10 billion deal, may be in jeopardy or something to that nature. And I think it's really more that this is a prelude to what is going to happen. I do like Oracle here. I am positioning it for my own account, not in trading. I want to own that stock. It's down in half. The stock has 3 billion shares outstanding, and the stock was down more in market cap than the deal would ever be, even if it blew up to zero. So I think a bit of an overreaction. And then I want to talk about one more thing, and then I'm going to throw it to you, and we can talk about, stuff out there in the market, yesterday's trade, etc. But Waller is on the tape, and he's stating to Trump basically how important it is for Fed independence. And I don't know why Trump wants to control the Fed. That to me is strange. So I don't know what your thoughts are on that and the Oracle news, and then we can get going.
Yeah. So a couple things on all that. For one on Waller. So all of a sudden, like his hat's in the ring, right? I mean, all Polymarket or Kalshi, who one of the betting sites, all of a sudden he got mentioned that I think Trump's sitting down with him to interview him for Fed chair. So at first it was only the Kevins that were thought to be in the running, and now Waller's got his hat in the ring as well. And I think behind the scenes, you're hearing about a lot of pushback against Hassett, at least, in that he's too much of a Trump insider, not enough of a Fed insider, and that there's some real concerns around just the confidence in his ability to lead the Fed or confidence that the markets would have in him. And so, I think it's interesting that now you've got it was just a 2-horse race, and now it's a 3-horse race for the next Fed chair. So that's one thing to watch. The other thing to watch is, with Oracle, I didn't see the specific Oracle news, but one thing that I'm seeing with a lot of these names right now is that Oracle, Broadcom, Nvidia, like all these prior, leaders leveraged to the AI theme have seen a big pullback, and they're not keeping up, more volatility in the last week, and they're not keeping up with the market. What's interesting, and we've talked about this before, Larry, is that, what's looking ahead to next year, what if you see the average stock start to outperform and kind of take the lead? What if it starts to become less about the Mag 7 and more about the other 493? And, I think what you're seeing with Oracle, and it's pullback, and yeah, maybe this is a good level to, to start to get in. But, Microsoft's well off the highs, Nvidia's well off the highs, all these big mega caps are now lagging.
Yeah, I mean, we've been seeing that for over the last month and a half, right? And a lot of these stocks are in correction minimally, and some are in a bear market. I mean, Oracle's certainly crushed down about 40+% off the high. I'm going to use an Alan Greenspan term. The irrational exuberance is coming out of the playing field right now, and I think that that's really important to look at moving forward, because really that's, you know, the name of this game, especially in the bull market of the last 3 years. It's really, especially this year has come from, you know, 7 stocks, 10 stocks. The year before, the same thing. Big tech outperformance, and I do see what you're seeing. I do see, smaller cap stocks and, regular Dow stocks, mainline stocks doing better. But the better question is, why does there have to be, and maybe there does, sector rotation? Like, why can't there just be a point in time where everything is up or everything is down? And we see this on a day over day basis. Like, as soon as Apple goes up, Nvidia is going down. It's just strange, and you can look at like 2 or 3 Mag 7 stocks and go, oh, these 2 or 3 are down, what's up? That's the first question that we ask in this office. What's up? What are they buying today? So I think maybe going into next year, that may be what is going to turn here. The fact that they may not be able to buy something else because they may be losing a lot of money. But you did clearly point to all these stocks. So, like, even Meta bounced a little, but Meta got under 600. Highs were in the high 700s. Microsoft's down significantly off the highs, right? And I think the market is placing worry in what is happening moving forward. I guess. I mean, that's what I'm thinking, and that's what I'm seeing.
Yeah, I mean, if you're talking about stocks that are taking turns, it looks like it was Tesla's turn yesterday. Tesla is close to breaking out to new highs, and one other one out of that group that's getting some headlines overnight was Amazon. Amazon's doing something with, I don't know the exact details of the deal, but they're the latest one on the OpenAI bandwagon. It looks like, with a $10 billion deal to do something. I don't know. I know there's chips involved, but I don't know the exact details. But again, another. I don't know if they're trying to save the market with another OpenAI headline there.
Probably, but my question is, why does the market want to see that? And why, like, if they did a deal potentially over the long term for whatever, why do they have to keep announcing it? And I mean, are they doing a series round, OpenAI? Like, they're not a public company, so I don't know if they're trying to juice their valuation or raise more money or what the reason is. But to me, these are deals in the way out future, if they even happen. And it the market is certainly telling Oracle, Microsoft, Meta, we don't want you building a gazillion data centers. That's not really your business. Stay out of it and do your thing, which they all do very well. It's just a matter of now they're they're stuck doing all these deals. So that's the one thing I think that's coming. My takeaway from this is they don't like these deals. They don't like, at the beginning they did. I mean, you remember Oracle. Oracle's a funny one, and it's because I'm going to start taking a position there, personally, not a trading position, but a position. But what I think is interesting, if you go back 2 quarters, the stock made an all-time high, and the stock made, like, a low of the year off of this quarter. In 1 quarter, the whole mindset has completely changed on the business. So
Have
you
you,
know
do you pay attention to Oracle's, some of the news around their credit default swap spreads?
I saw that, and I'm looking at it. I just think it's a pricing mechanism for, or punishment for the fact that they're taking more undue risk. So the market's saying, hey, listen, you want to borrow money or you're out there, we're going to make you pay, which makes sense. So, yeah, I mean, I have. Um, I mean, here's my thought. Oracle was a top 10 company in the world. It may still be right in there. So it's one of the largest companies. I mean, incredible market cap shift. It was over a $1 trillion entity, and now it's 500 billion. It's literally in half, almost, fairly close. So I think, I don't know if you have a market on that to pull up, but that would be interesting to look at. But I'm
I'll see.
sure.
I'll see if I can find it. But just for everyone watching, so a credit default swap. I mean, it's basically insurance you can buy against default on a bond, and the as the cost of that protection, it's like a life insurance policy. As if you have high risk factors, the cost of that protection goes up. Well, the cost of buying protection against default on Oracle has been jumping a lot here recently, and it's been grabbing some headlines, but flying mostly under the radar. And I'll see if I can find a chart to pull up.
Yeah, I mean, I definitely think that that's an issue, and the market is on top of that, and they're not happy with these companies, and I'm not sure why these companies want to. I mean, I guess, is data center really the wave of the future? I mean, it just seems like a brick and mortar hard, you know, thing, and I don't know what you know what the end game. Maybe you have a better handle on that, what the end game is to being involved, or putting data centers all over the country you know
Yeah, just really quick. So here's a chart of Oracle's 5-year CDS spread. So again, this blue line, this is the that cost to buy protection against a default on Oracle. And scroll down a little bit here. This goes back to 2020. So this goes back 5 years. But here's the recent jump that's been grabbing attention, and that follows. I think it was Oracle was some of the news around how they're really not making money via their data center activities. That the cost to lease and own some of these NVIDIA GPUs, they're net barely getting by or even losing money on the deals, and that kind of coincided with this jump in spreads that you're seeing.
Yeah, it makes sense. I mean, that's just sort of what I was saying before. I don't know what the play is. Maybe there's a play around it. Maybe they want to capture OpenAI's you know business. I'm not really sure. Or some of you know these AI companies, they're other businesses. So maybe it's a play like that. I'm not really sure, but I don't see it panning out really well, especially when, think about this. It's one, two, three companies that are asking them to build all this capacity, right? Doesn't that make you a little bit nervous? It's not really a proven full entity that they'll ever need this much storage space. I mean, I don't get it. Maybe that's the big story of next year is the blow up. But it's interesting to see the news in Oracle. That news is not coming from Oracle. It's coming, I think, from what a source. Blue Owl. So I don't know. We'd have to get more like intel on what's actually going on there. But that's definitely something to keep an eye on. Keep an eye on the credit default swaps in Oracle. I would be very shocked if they defaulted on anything. But market's much smarter than us, so there's definitely smoke. So there may be a fire, and you know, I don't know if you were in front of it yesterday, but markets were. It was a crazy day. 50 points up, 50 points down, 50 points up, 50 points down. Market looked like it cleared the upside, and then at the end of the day, with like 2 minutes to go, the market sold off like 40 S&P points. So
Yeah. Well, I was talking to Eric yesterday on the podcast, and we hopped on just as the job number was coming out, and we always you talk about the reaction to the reaction. I mean, the initial knee jerk reaction to the jobs number was a positive one. I mean, it looked like it was a fairly Goldilocks number, so to speak. It was not too hot, not too cold, but then when you started to look at some of the prior months, there are some concerning developments in the job market. I'll see if I can pull up a chart here. But I mean, you had the initial positive reaction from the market, and then the sell off later in the day, because I think part of it is here's the jobs numbers. So here's the monthly change in non-farm payrolls going back to the start of 2021. But just right here, I mean, this cluster recently, which started right after all the trade war headlines started to hit. You had November coming in plus 64,000, but October, which I don't think we knew yet because of the delayed data, October showed a loss of 105,000 jobs. And I mean, that you can kind of see again this cluster of bouncing back and forth between positive and negative territory on the jobs number. And that's, to me, this is notable because every time you see the Fed, start to cut rates more aggressively, it's usually because they're too late. Like, it's usually because you start to see, labor markets deteriorating and they're too late to stop it. And it's interesting to have that in the back of your mind, given some of these red bars we're seeing now on these monthly jobs numbers.
yeah, I mean, to dump all that data down is pretty, you know, pretty unbelievable. But I'm not, I don't know. I'm not reading a lot from it. I think it goes into the Trump rig file. The numbers that looked negative never really showed, and now they're dumping them down with a lot of other numbers. A lot of other data. So it's
What's he going to talk about tonight? He's having an address tonight, right? I mean, nationally televised.
Yeah, I don't know. You know what? I don't know. Is it going to be blowing up boats in Venezuela? Is it going to be Rob Reiner's death? Who knows? I mean, this guy is so unpredictable, but I think what do you think it could be? It's got to be something pretty big, right?
I mean, things I've heard is that it's going to be a victory lap on the economy, but I mean, I don't know. But to come to get on at 9, I think it's 9 p.m. nationally televised. I mean, who? But again, totally unpredictable. So who knows?
Yeah. We'll have to stay tuned. And it's right before quad witching expiration, which I really thought quad witching expiration was going to be to the buy side, but it you know doesn't appear clear. It still feels that way, but they're definitely chopping through a lot of wood right now. Um, Interestingly, the S&P and the Nasdaq were on the highs when the Oracle news was released, and the market knee jerked down. And I'm thinking to myself, that's a lot. That's a lot of dollar evaporation for that type of headline. But again, it's what we talked about. It may be a precursor to things coming in the future. So we'll see. Uh, what I want to talk a little bit about is oil. Oil made a yearly low basically yesterday, traded below, I think, right around $55 a barrel. Bounced a little this morning. We have a position, we like nat gas a little bit on the pullback. That's a good mean reversion setup. We got there's not a lot of good ways for subscribers to play nat gas if you're not going to trade futures, which they call gas Vegas. So those are very volatile. But like I looked at UNG, which is a proxy for natural gas, and it's a $12 name. So it's going to be tough to play in that sandbox. But I do like oil, USO. Maybe you know look at
Yeah,
that.
I'll pull up a chart of oil really quick. So this is going to be the cash index. This isn't the future, and I can't get my see if I can get, there we go. So yeah, so this is through the close yesterday. So there's the breakdown that you're talking about. Thing with oil is that, and it's up. I got USO up 2% this morning so far. So at least looks like it's gonna come back and try to test that 57 level that it broke through. But we wrote this up recently. The thing with oil prices at these levels is that pretty much anywhere in the world it discourages new production. And you've already seen the rig count pulling back pretty heavily over the last couple years. So, as a near term catalyst, is that going to impact this? Day to day, maybe not, but like big picture, there should not be. Again, this discourages new production, but this moves. I mean, it's getting very oversold. I mean, you get the RSI down. And this is one of the lowest levels you've seen the RSI at in the last 2 years or so.
Yeah, I mean, I like it. It's just a very tough trade. It's almost like you're going against Trump and basically what the administration is really focused on. But I haven't seen it. I always laugh at this when oil goes up a lot. Gasoline prices at the pump go up, but commiserately, they don't go up as much on a big up move. On a down move, they never come down. Like they're barely like where I live, they're barely down. I mean, and you got $50 oil basically for all intents and purposes. So I think somebody's making a lot of money in here. Um, and somebody was telling me, um, it's harder to make the cheaper gas than it is to make the more expensive, super unleaded, the 93 octane or 92 octane. So, it's weird how the whole thing sets up. But overall, I think there's a trade to be had in oil. I think there's a trade to be had in natural gas. Again, that's very weather related, but that thing came off from over $5 to under $4, which is a very large move on a $5 product.
Yeah, here I'll pull up the nat gas chart really quick. Again, this is the cash index for nat gas, and this is through the close yesterday. I know I've got UNG up about 3% this morning, but to your point, over this, I mean, rally. I mean, this thing went from 270 in August to a peak of 525 earlier this month, and now we really stretched to the upside. This blue line's a 50-day moving average, stretched well above the 50-day. So no surprise to see some mean reversion come in here, but that pullback now has kind of clipped the 50-day back to also price support around this $4 area. So that's we've been getting active there this week with subscribers getting a position there in UNG on that pullback.
Yeah, yeah, I like it. Again, I don't know what you can get, but certainly back to the mid fours, I would think. And then who knows with weather what will end up happening. But overall,
There's the weather angle, but the thing with natural gas too is that to the extent that this AI data center build out is happening, you get all the hype names make the headlines, the open AIs and Amazons and Oracles of the world, but natural gas accounts for about 40% of the supplying energy demand for these data centers. So, and that share at 40%, that is the largest share. There is no larger source of energy suppliers to data centers than natural gas, and it's expected to stay at that same percentage into 2030. But data center capacity is supposed to double over that time. So you got there's that demand catalyst, and the other one is that LNG exports are hitting records. LNG exports, so liquefied natural gas that gets natural gas gets cooled, gets put on these specialized ships to be sent abroad. Well, a lot of that's going to Europe. LNG exports are up. I think it's like 25% year over year, and that's a record. So, in addition to kind of these traditional fundamental drivers of nat gas, you've got these incremental drivers with data center energy demand and what's happening in the LNG space.
Yeah, I think definitely a tight. It's been a tight market. That's why you've seen the rally from wherever. Every time I think about nat gas, I think about when I traded it fairly actively. Um, when nat gas was moving like $5 a day, it was like over $20 at one point. Traded as low as in the $1 handle, and now it's back here. So, I think
How,
there's
how do you used to trade nat gas? You trade the futures?
just outright, kind of specking, and was just looking to scalp it. Looking at patterns, sort of how it's setting up now, looking at, mean reversion inside of a bull trend. That's why, in a way, I mean, like, not a lot of stocks in the stock market set up like the way I like the setup, like in an Oracle. And obviously, I know Oracle is down slightly today because of news. You got to watch the trading action there. I actually think if it, shrugs this off and trades positive, it could mean, that this could potentially be a bottom. So I want to look at that. But as far as setups, you got things going down, 30% in a week, 50% in a month and a half, or two, in this case, 3 months. That's stuff that looks interesting to me. You don't see a ton of setups like that, but when we get them, we like them. And, we have quad witching um, coming on Friday. The setup still seems to buy, but it's really, really extra choppy. I mean, even today, where I thought that you'd come in, market was higher, and you'd see, sort of higher action, you get this headline popping in the market and moving, NASDAQ 100 points in like 5 minutes. So, got to be leery on that front. But what do you make of bonds here? I mean, they definitely don't look good. Um, I don't know. What's the yield pushing right now?
So I'm just pulling up the 10-year.
What is it? Yeah, it's 416. So we're sort of like mid range after the meeting. We got up to like 420 and change, but it hasn't had the reaction that I believe the marketplace was thinking. Right? I mean, we've had 3 cuts and rates are higher on the 10 year. That's pretty negative, right?
Yeah, I mean, you definitely seen the yield curve steepening because, yeah, I mean, I've got it pulled up. So the 10-year, has been pretty range bound over the last several months. So about 4% on the low end up to, like you said, 420 on the high end. We're near the high end of that range right now. I mean, yeah, Fed's cutting rates, 10 years staying where it's at. So yield curve's steepening. So what's the 10-year telling you? I mean, one, it could be, it expecting better growth because of the cuts. And if that's inflationary, that's one thing. The other thing that, needs to be in the back of people's minds heading into next year is that, and I think I talked with Eric about this yesterday, but 34% of all U.S. Treasuries outstanding mature next year. So that's like nine to $10 trillion worth of Treasuries mature next year. A lot of those were issued back in 2021, around coming out of the pandemic and all the stimulus from that episode. But that's a huge wall of refinancing, and you've got still running a 6 to 7% percent of GDP deficit on top of that. So you've got new supply coming to market as well. But I think that'll be something to keep in the back of your mind as you're watching some of these longer dated yields kind of going into next year.
100%. We're going to keep an eye on that. I think that yields are going to press higher, and I think it's not relevant now, but it may be once we get above 4.5 if we do. But it's interesting. Bonds are actually prices are up on the year. Yields are slightly down on the 10 year. Um, but it's been a no trade, really. I mean, the high price low yield was like 390 something, and then we had higher prices at the beginning of the year, closer to 475. So I see that, and overall, big week for the market expiring, quad witching. We have a product. We did a trade. We bought call options. They're not doing great because of the chop. We need a Hail Mary miracle, which I don't think we're going to get. So we may look to, exit the trade not profitably, but, we'll keep our subscribers up to date with that. Again, this has been a really, really great product for us, but overall, right now it's not doing well. And as we're on the air, Oracle had a very negative reaction, and now it's down only like two. I kind of think it's going to be up today, fairly significantly potentially, because this is like a known like, I don't know, is this like that big a deal for, we always talk about it. Oh, well, it's only $3 billion for a $50 billion company. This is like $10 billion for a $550 billion company. So, but I do think it's caused, thought in people's mind that, hey, there's definitely trouble out there. And then,
Well, when you're priced for perfection, any little bump on the way, any little dent to the outlook can weigh pretty heavily, right?
100%. And that's what we're seeing here. But as I'm looking at the stock, it's down like $2. It was up actually $4 this morning, breaking out to like the 192 after the headline it came in. And you know this is you know this is a level that looks interesting to me. I would, I don't want to spend that much time focusing on it, but it is something that you know, uh, is important. And actually, Oracle came out with a statement saying everything is on track. Like,
That news was enough to warrant a statement, huh?
that's what they do. But it's just funny because the truth is, some news writer somewhere comes out, puts out something, and the market, goes, crazy for it. But
We were, hey, real quick, we were talking about interest rates and bonds a minute ago. Someone in the chat asked about Japanese bonds. I don't know if you've been tracking that action. If you have any thoughts on what's been happening over there.
yeah, I've been tracking it, and I think that's a cause for a lot of concern. It's funny for me as a trader for so many years, you know, not really trading JGBs, have traded them, but just always seeing negative yields for years and years and years and years. And now, these bonds are basically up at around 2%, and the Japanese people can now put their money and get money for their money. And I think that that's what their current bunch of administrations had wanted, is to get rid of negative rates. And I think they have. And I don't know if there's going to be an unwind here of the carry trade or whatever, because this all plays into currency and bond yield. So, we'll keep an eye on that. But I don't have a trade there right now. Like I wouldn't do like a mean reversion trade because I think this is a government, you know, a government move to move the market.
Yeah, I think it's also a reaction to stimulus too, right? I mean, the new kind of the new political party in charge there is campaigning on more stimulus. And I saw a headline the other day that they did pass some sort of economic stimulus measure. You've seen something similar in Germany too, where I mean Germany's been they had a big stimulus package at the start of the year, but you've seen on a global basis, you've seen a big backup in yields continuing. U.S. has been traded kind of sideways, but I don't know if it's a reaction to you know expectations for higher economic growth, if it's a buyer's revolt with the bonds, if they're concerns about public finances. But I think that'll be, yeah, we'll see if there's some spillover into that. Like you said, there's not really in terms of how that could impact the carry trade. I mean, dollar yen's not been doing anything. I mean, we exited our long euro position last week. Finally after sitting in that for a while, but there's just been these bond movements at least aren't really driving much volatility in currencies just yet.
No, and currencies have been. It's funny because we're going to limp into the end of the year with the dollar having one of its worst performances against the European currencies in a while, against the euro especially. Um, and you don't see any like mean reversion in this. But what I would want to point out to subscribers to our currency wizard trading product is usually we're getting in and out of trades bi-weekly at the most. I mean, these trades have taken, I mean, this last euro trade took months. I mean, months of not even moving 2 points. So the currency volatility is very low, and we'll have to, you know, keep that, keep an eye on that and keep that in check to make sure our subscribers are in full understanding of what's going on in the currency market. So that's really pretty much it as far as what I'm looking at. One more that is interesting. Netflix. It's the first time that I've seen like a company split a stock and actually the stock get hammered, hammered into it and hammered after it. So that stock is down fairly significantly. I mean, I think the game has changed there in streaming, and the competition is fierce, as you could see, with, all of these, deals of Universal and Warner Brothers and etc. So, I'm looking at, I have that stock on my radar. That's one of Eric's favorite. He loved that stock. He talked about
Yeah.
that stock every day for a year. I mean, he could not talk about it. But
Yeah.
to me right now, it looks interesting. But I haven't put a position on, but we're definitely looking at it. I don't know if you have a thought on that.
No, not really. I mean, other than if you're looking to put a position on, it's extended pretty far below the 50-day right here. Several signs of being oversold, and the price support. There's a lot of price support in the 95 to $100 area, which is where we're at. So I mean, yeah, it would make sense to see at least a bounce here. Whether that's a more durable uptrend remains to be seen. But yeah, I mean, it's still this thing's going to move on headlines around this Warner Brothers news. I mean, that came out just an hour or two ago that Warner Brothers likely to reject Paramount's $108 billion bid and back Netflix instead. So, there you
Right.
go. That's the headline.
Yeah, well, I don't think. Listen, you're going against Oracle actually in that deal, unlimited dough. So I think that game is not over. But I think competition has stepped into the market there, and I think Netflix is still probably the major player. Um, and then just looking around, you know, stuff just doesn't. I mean, listen, it's quad witching this week. Who knows? But stuff like, I feel like it's almost one trade. We got the Bitcoin, Nvidia, Microsoft, Oracle, trade of just relentless selling. And it's funny, came in this week and Bitcoin looked under pressure and then it just stopped. The pressure on it just kind of stopped. But I do think lower prices there. I think we're going to have to keep an eye on it, and we'll see. We'll see if those prices hold, and MSTR is still under pressure, and we'll be watching that. But really, the focus is quad witching, the unwind of futures and options for the quarter. And then again, what is today? The 17th? Are we the 16th or the 17th?
We're on the 17th, and we still
Right.
have CPI to contend with too this week.
Yeah. I mean, this data stuff is just, it's kind of being ignored just because it's like a data dump. But, you're at the 17th. You're really, what, 8 trading days left in the year? 9? I mean, it's pretty. Pretty light coming into the end of the year. So really, I think this week will be a little bit, volatile, and then next week settle in for year end and on to 2026. Before we leave, I'd love to know. I'm putting you on the spot. Your top couple of thoughts, um, predictions, of what you think. And, they're just predictions and no one knows. And, markets are ever changing and news is ever changing. So, but just going into the year, what you think are going to be really the most important couple of things to keep our eye on.
Yeah, so I would say there's really three things that I would watch for the year ahead. And by the way, I've pre-recorded some videos around this to share on the podcast over the holidays. So just so everyone knows, tomorrow will be the last normal podcast of the year. But we'll be sharing content still over the holidays, stuff that we've prepared for you. But
Yeah.
tomorrow will be the last normal. I just want to put that out there. But so three things that I'm watching. One, we talked a lot about interest rates. I talked about kind of this wave of debt refinancing with U.S. Treasuries that has to happen next year. But we're still running big deficits. I would watch for kind of this whole bond vigilante thing to make a comeback. Watch for people to start, harkening back to the bond vigilantes of the 1990s in the headlines. I think you could start to see a lot of volatility in the bond market, and which could potentially spill over to the stock market as well. So that's one thing I'm watching. Another thing I'm watching is more on the inflation side. We've still seen leading indicators of inflation turning higher. So we've had about 5 months in a row now where CPI has been accelerating. Watch to see if that continues. And then if it does, the third thing that I'm watching is with commodities. So commodities do very well in an inflationary environment, and commodities are relative to the S&P 500 are about as cheap as they've ever been. And we're sitting on here today talking about the pullback in oil and natural gas, and looking to get involved here. So just I would look at commodities as an overall theme that could be a surprise winner in 2026.
So you think continuation in gold, silver, etc., or
I
is it?
think I think it starts to rotate. I think metals can still do well if you're seeing dollar weakness persist, but I think you start to see some of the strength rotate. Start to move from gold, silver. Even copper's been breaking out recently. I think you start to see oil and nat gas participate there as well.
It's funny. I went to dinner with a bunch of guys last night, and I was sitting next to a guy, and all he was looking at was silver. I mean, this guy probably never looked at it in his life, and he's in silver. And he's saying how much money he's making, and it's unbelievable. And it has been an unbelievable move, but I don't know. I think these metals are owned by the public in a big way. So you know, you got to be careful. They've been working, but I do like the beaten down. Like I just don't see how oil could go much below $50 a barrel. I mean, unless the economy is in a complete stall. And really, the only time we've ever seen that was, the COVID trade where, oil somehow went
Went
negative.
negative.
And I'm still on the record, okay? And I'm still on the record that no commodity will ever trade negative again, ever. So, I mean, ever's a long time. So maybe not ever, 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 but for why would it ever it's something that you need, and you have to pay something for it. So
Yeah.
that
You
was
you teased some 2026 predictions on Monday. Do you have anything you want to share today, or are you saving it for tomorrow?
um yeah, I mean, maybe we'll do a little tomorrow, but no, my biggest thought or prediction is I think that we're going to have a lot more volatility for more of a sustained period of time. And I feel like the market, especially in individual names, is short a ton of volatility. Broad-based index like FXI, all of these indexes, the vols are running so low. So I think really the surprise trade that I like is sustained volatility for more than our regular 2 days or week at the most. But sustained volatility with crazy market action, I think will hit at some point next year. Um, I think commodities that have not done well will do better, and commodities like the metal complex might start off the year well, but will face some headwinds. I mean, where's silver? I mean, I saw above 63. I mean, the thing is just like a freight train. Right? 65 now. I mean, it's unbelievable, right? I mean, this is
Yeah.
one of the biggest moves. I mean, silver's up over 100% on the year. I think it's up like 125% for the commodity. So,
So someone in the chat asked about gold. Do you have any thoughts on gold right here?
I think gold is being dragged up by silver. It's still like hasn't made a new high, but right there. Probably trade a little higher in here, and then I think we'll get some trading moving forward. So, my thought on gold is maybe a little bit higher, but maybe get some two-way trading next year. It's amazing. I've looked at metals forever and ever and ever, and I mean, what we've seen the last couple of years is pretty amazing. And what's more amazing is why it's had no market effect. Like you're looking at CPI, and I agree with you. CPI is creeping up and it's going higher, but it's almost like the bonds. What's the level in CPI that it's going to matter? You know what I'm saying? Like, if core inflation gets to 4%, is that the number? 5%? Like, there's got to be a number like in bond yield. Like, a friend of mine was saying the other day, no, none of these younger traders or whatever, no one cares about bond yield. Doesn't matter. Bond could be down a point, up a point. It's irrelevant. But at some point, that becomes a headline. So, I'm going to ask you, and, we're getting closer to the opening. So I want to get closer to wrapping. But like what number in CPI does it, really impact the market? Like in 2022, especially near the end, every time there was a release of CPI or PPI, the S&P 500 had a 2% move or a percent and a half move that day. Like right now, it's basically irrelevant, right? I mean,
I know, Larry. I'll tell you right now. I know exactly the CPI number that'll start to impact the stock market. I know the exact number, but I'm not going to tell you
uh-oh.
because I made a video. I prepared a video for the podcast for the holiday specifically on this topic, and I have a chart that breaks down all the CPI ranges and when it starts to hit the S&P 500's PE ratio. So I have the
I love
exact
it. I
number.
love it.
The
I
exact number. So
so
I'm not going to
so
tell you.
I'm gonna. I
Everyone's
don't
going
even to be honest. I don't even know. I didn't see the
so
recording. So,
everyone's going to have
um,
to tune back in. They're going to have to make sure they're coming back to the podcast over the holidays to watch.
I love it. Yeah, we're gonna have some good stuff. Talking a lot about next year's action, our thoughts, different things we're looking at as we vacation. Everybody here gets a rest. I I will do this tomorrow as well, but I want to thank you. I want to thank the staff, the people. I'm looking up at the window right now, the five, six, seven people that are involved in making my brand and my podcast successful. I want to thank everybody. You guys are amazing. My team of analysts. There's a lot that goes on behind the scenes to get us out to market, and I'm very, very proud and happy with the people that I'm working with, and obviously you are one of them, and you are extremely important to what I'm doing, and I want to thank you, and again, I hope it gets out there to more people. I've been doing this 7 years to the public through a number of different products. And again, this year we're pretty much up on every single product. This year isn't one of our best years, okay, but with what happened and how people probably got sick of it on the podcast, listening to me be bearish for 2 months as the market ripped everybody's throat out. We were able to manage risk and make our subscribers money. And, it's funny how trading is. If you and I spoke in April, end of March, April, I would have told you this would have been the best year of all time. And then all of a sudden, after the tariff tantrum, whatever, we had that trade to the short side. Then we got long, but we didn't take out. We didn't think the market was going to move 40%. But we took money out of it and we sort of shied away. But, I'm a little disappointed that we didn't, produce more on the up, but we don't want to be greedy. But an interesting year. So you never know. You never know. You can start the year out slow and have your greatest year ever. Or what we did was we were giving like literally, I remember like 10 trades a day. I mean, it was so busy. And then all of a sudden it died. So everyone be patient, realize it's a long game. We're looking to make money year in and year out. And we've been able to do that. And not only do I want to thank you guys. I want to thank my subscribers and people watching the podcast for, trusting in us and, interacting with us and making our job a little bit more fun and easy. So I'm going to wrap on that. And Clint, I appreciate you hopping on, and maybe we'll do a three-headed monster tomorrow for the last day of the year. Get me, and Eric on. That should be interesting. You keep the peace.
Do
That's
it.
all I could
That's,
say.
yes,
Uh,
I'll be the peacemaker.
exactly. So I wish everyone a good day. Watch out, quad witching. Talk a little bit more about the unwind on Friday morning tomorrow on our podcast. But I appreciate you guys, and everyone have a great trading day.